In this week S&P 500 analysis, we'll analyze the S&P 500 price action to see if it is trying to break out or doing a last-minute shakeout before the next big move down. We're going to examine the stock market internal and its sentiment to see what the stock market is telling us. The S&P 500 was struck around by some encouraging news of a vaccine from Moderna. It reported encouraging phase 1 trial result on Monday, and the market made a big move up. Then the market was pretty much held in check for the rest of the week because of the continued tension between the U.S. and China, and also the continuation of job loss. Last week, job loss claim reports show another 2.4 million people lost their jobs. Looking at this index chart here, the Russell 2000 made a nice move back up to the December 2018 low. As a matter of fact, it is one of the strongest index last week. It also closes at a recovery high. The NASDAQ 100 and the NASDAQ Composite continue to march higher. Other than that, all the other indexes is pretty much confined in its consolidation range. Looking at the weekly S&P chart here, the S&P 500 last week gained more than 91 points, or 3.2%. And it is 438 points away from its all-time high made back in February, or 12.91%. And it regained 763 points, or 34.8% from the March low. Last week, the S&P 500 put in a NR7, and that is the narrowest range within the 7 period. Also, it broke out of this engulfing candle on the upside. And looking at the daily S&P 500 price action, other than this big gap on Monday, the price is pretty much in a consolidation range for the rest of the week. Now, before we analyze the daily price action of the S&P 500 in more detail, let's go take a look at the stock market sentiment and the internal to see what the market is telling us. In this sentiment chart, we see that the VIX has been coming down for the month of May, and last week it got as high as somewhere around 30 and closed out the week at 28.16. Then also at the put-call ratio, you see that the put-call ratio in the first couple of days of the week, it actually went below 0.6 level and just got as high as 0.76 during the Thursday, a little bit of a pullback, and finished the week at 0.72. So this sentiment chart is telling us that there are more greed and fear in the market, and the participants are getting a little bit more bullish. The up-down volume went above 9 on Monday, and the last time it did that was basically back on April 17. The low for the week was a little bit under 2.6. It was minus 2.65, and that occurred on Tuesday. And for both of the days that the S&P 500 pushed higher, there were 2,413 more advancers than decliner on Monday, and 1,832 more advancers than decliner on Wednesday. There was only one day the decliner were leading the advancer, and that was on a Tuesday, and that was only 604 more decline than advances on Tuesday. On Thursday, while the S&P 500 closed slightly down, the advance decline was actually positive with 132 more advancers than decliners. For the NYSE new high, new low, for the entire week, there were more new high than new low. Other than that, it wasn't much to write home about. It's pretty much subdued and finished off the week at 16, more new high than new low. And the NYSE AD line is still showing a negative divergence as the S&P 500 continue to grind itself upward. So what we need to see in the coming week is for the advanced decline to take out this pivot high to resolve this negative divergence. Otherwise, we'll be on the lookout for a little bit of a pullback to resolve that divergence. The Nasdaq 100 is only 3.23% from its all-time high, and the daily new high, new low is still pretty much under 100. This is pretty much indicative of and this entire push-up on the Nasdaq 100 is pretty much concentrated by some of these large-cap tech stocks, such as the FANG stocks. And the Nasdaq AD line continued to show divergence as the index continue to push higher. So I'd be cautious in chasing the tech stock right now until this divergence get resolved. Now let's analyze the S&P 500. Before I continue, I want to thank you for watching. These videos take time to make, and I hope you find them useful and informative. If you like the contents in this video, give it a thumbs up. That will help me a lot. And if you're not a subscriber to my channel, click the subscribe and the notification icon so you won't miss any future video from me. If you have any suggestions or comments, please post them in the comment section below and share this video with others. Daily price action. We see the S&P 500 actually move above the 618 last week, and it's trying to get up to this 200-day moving average and also fill this gap, but still unable to do that and pull back and did a little bit of a back test here at that 618. So next week, we're going to be watching to see will the S&P 500 continue to move up and fill this gap and get back above the 200-day moving average and essentially take out the level 3,000 and possibly make its move up to this price zone near the 3090 and 3136 area. In the downside scenario, if it is unable to hold this 618 level, then we essentially watch it to see would it come back down to the 50% and get a bounce off of that. If it's not, then we're essentially looking for this thing to retrace back down to under the 2700 and down to this 2650 area at this 382 retracement level. Now let's take a look at the ETF for the S&P 500, this SPY. Remember last week we talked about a couple upside scenario. It's basically the upside scenario involved breaking above this value area and breaking above this 291 and move up to tag this 297.97 and possibly fill this gap up here and get up to the 300 level. So you can see that it broke out on Monday and tried to come back and back test that and then came up and got close to the 297.97. This high is actually 297.87. So now it's pulling back. So what we need to see next week is to see will it continue to come up and fill this gap and work itself toward a higher level, or would it come back into the value area and pull back and test the point of control on this composite volume profile near the 282 level. Now let's go and update the volume profile to contain all the latest prices. So one thing to note is the point of control did not really change. It's still sitting around this 282.40-ish, but the value area high did expand it upward. And you can see right now, last week's price has pretty much been testing this value area high level, and they're sitting near the edge of this level right now. So essentially next week, we'll be watching the upside scenario is to continue to push into this 297.97 and fill this gap and get above the 300 level and see how high would this go. The downside scenario is for this thing to pull back into the value area and come in and check this point of control near the 282.40-ish and see would it get a bounce back up. If it doesn't get a bounce back up, then we'll be looking for this thing to continue to come down to somewhere around this 275 area near the value area low. Let me go and update this composite volume profile all the way to the most recent price. So first to notice on this composite is the point of control. This entire price move have established a point of control very much the same as this particular price move near the 282. So we expect this 282 area to provide some strong support and resistance So in summary, the S&P 500 made a tiny move toward the next big move. It could either move above the 3,000 level and get back above the 200 SMA, or it could finally pull back to the 2,700 level and get the bear all excited, and all those talking heads start talking about retesting the March low. The market is showing more bullish sentiment, but not strong internal. So I'd be remain cautious until the internal has straightened, and have to see that those negative divergence between the AD line and the S&P 500 get resolved. Are you waiting for a breakout or a shakeout? Share your thought in the comment section below. Thank you for watching. Good luck and stay safe.